changes everything. The perception of having resolved this issue, it's going to move the market even more than the actual resolution. Okay, and that's the very nature of the Forex market. We're going to be announcing a resolution that's going to make everybody happy with the Greece situation, and there's going to be no more fear. But just saying that we are going to be announcing a plan, or we already have a plan that's in the works, that's going to take care of the Greece issue. And when the actual plan comes out, it will be a different story, of course, if the plan actually has a lot of merits, and then we'll see further strengthening in the euro. But if the plan comes out to be a complete disaster, that will be a different story, because by then the euro will probably be back up above the 135, 136 because of the perception of a plan. So, you can't really look at the market trying to predict where the euro is going to be by putting your focus on the plan itself. But the perception of a possible plan that could fix everything, that's where you need to put your focus on. I know it's kind of difficult to understand sometimes, but once you get a hand of it, you see things much easier, and you'll be able to see the market in a better light, I think. So going back to the market today, we're seeing euro, it's gaining across the board. Seeing on the strength meter, euro is around the same strength of the US dollar. I'm not going to say much stronger. Well, look at what took place today. It is still showing about 60 pips of gain from the starting of the day. So yeah, of course the euro is strong, but the dollar is not weak either. We're seeing the pound dollar sort of staying close to about unchanged level, about 27 pips a gain right now from the beginning of the trading day. But of course, the pound dollar has dropped significantly since yesterday, and once again we hit the lower end of the support level, and we got as close as the 14800, and the market has bounced back since. Now remember, guys, there's a reason why I really pay attention to these support and resistance levels, and because of the fact that the market, every time they reach these kind of support levels, they bounce back, and the idea behind the support levels has everything to do with how different type of trading converges and look at the same level to be significant. Now, you'll hear me saying the same thing over and over again, but that's to make sure that it really creates an impression, and that's so next time you look at something such as the support and resistance, you will see them as strong points, as I would be seeing them too. So when we look at the market, it's not just the candlesticks going, red candle, blue candle, up and down. Every time when there's a movement in pips, that the market moves up a pips, moves down a pips, it's because there are orders being filled. Alright, so it's not only orders being offered, we're talking about complete orders. So when you see the market, like in this instance, the market dropped from 153.84 all the way down to 147.92, giving you almost 600 pips of drop in the past 1, 2, 3, 4, 5, 6, 7, 8 days, 8 trading days in the past 2 weeks per se. It basically is telling me that there are a lot of sellers in every level, in every pip of the movement. Right? There are more sellers than buyers. Sellers, sellers, sellers. And I made an analogy in my ebook. As the market moves, you can compare with taxi cabs. There's a lot of people, they all wanted to go to a ball game, so they all get taxi cabs and they tell them, hey, take me to the stadium, take me to the stadium. So that's why the market is heading to the stadium. Now, if there's no ball game going on, then the market is not going to be heading this way. Alright, so when you see the market move, do not look at it as a bus or a subway where it has a predetermined route where it is supposed to go. A lot of technical traders, they look at the market, they see, it's going to retrace back to here, or it's going to continue going because that will complete the wave. I look at that, I see, if there's no demand to push the market to that area because there's no fundamental news supporting it, why would it go over there in the first place? So there's a fundamental difference the way that when you analyze the market from a technical point of view, because all you see is the chart, and you can't escape around looking at the history. So if the market moves in a routine fashion, where if the market moves like a stoplight, right, like your traffic light, that every few minutes that it's going to turn green, and then few minutes it's going to turn red. If it's something simple as that, then yes, looking at the past history, it will give you an edge. Not an edge, it will even let you know what's likely to happen in the future. But the market really doesn't work that way, because you can't be looking at what happened yesterday or a year from now and then try to apply that into your trading today. And anybody can tell you that, looking at the past history is more of a suggestion as what you can see in the future. Alright, so when I look at traders just concentrate 100% on technicals, it is really a flop, because so many times, especially in the past 2 years, what we have seen is that the market moved to a complete new territory. And because of that movement to a new territory, everything has changed. And you can't really depend on what took place. And, the closest that sometimes that we have ever seen a level is an incident that took place like 3-4 years ago. And it really doesn't draw a comparison to where we are right now, because back then it might be a special crisis that took place. That's what drove the market to those levels, and we can't really use that to compare what's going on today. So you really have to pay attention to the market and to fundamental reasons behind it in order for you to really expand your horizon. Don't just look at one thing, at the technicals. Now, of course, I'm not saying technicals has no place in your trading. Of course, it is very important, but just can't depend on just one thing. You gotta be able to put them all together, look at them all together, and so you look at the market in multiple dimensions. And one other thing that traders, or the majority of the traders that I've seen that they don't really look at, is the time factor. And that's like when you look at a chart, you have the X and the Y's. The X is the horizontal and the Y is the vertical. You have the X and the Y's, but what you don't see is the Z. I'm using mathematical terms, but that's the timeline.